Thank you for having me back in this channel. My name is Steven. Today we shall be looking at moving average and what is our moving average. What is the major moving average that we are using? So basically we shall be considering what I refer to as a 240 moving average. This 240 moving average is a long time range moving average that happened to be one of the most powerful moving average that I've been using over time. This moving average has been in vogue for a very long time, and I've been using this moving average for almost 20 years ago, and it has proven very excellent. That is, it has hold the price 99% of time. That the price are moving towards that side, towards the moving average. Price has been repaired most of the time, or probably it has been rebalanced by 240 moving average. Now, without further ado, let's go straight into the chart and see how the moving average is being used. Now, basically, if you look at this chart from here, you will agree with me that the 240 moving average has been very accurate in holding the price. Now, the prices has been moving from this area, that is, we have the prices coming down from this area that has been moving down, and it continued that move up to this very place. And look at what happened to the 240 moving average, to the price when it got to the 240 moving average. Now, there are two things that 240 moving average does. The first one is to hold the price, and the second one is to tell us an entry, is to be able to give us an entry. Now, if you look at this area now, look at when prices continue to move down, when we have the 240 moving average that crosses from this area, then it moves down to this place, and once it got back here, it does what? It's the price rebounds on this place, and we have another entry. Look at how the entry go. We have another entry. Now, another thing that 240 moving average does is that it tells us a change of price. When prices change, it will let us to know that, okay, the position that we are taking has eventually changed. If you look at this place now, when the prices continue to move from here, once it got to this place, we have our price change significantly. And once the price change, look at the way the prices continue to move until they get to the end of the close of the day. So it makes us to have a glance, a proper look of how prices is reacting. It gives us a better information about the changing of price. You understand? Now, mind you, I am on 1 minute charts, and that is why I so much believe in the crossing or the crosses of price when it got to on 1 minute charts. I so much believe when prices are crossing with 1 minute chart. If you look at this place now, look at this very area. When these prices cross, what do we have here? We have a change of what? A change of direction. Now, you must know you must know that when prices changes, when there is changes, you must be able to filter out the real change in prices, the real change in crossing. Now, let's look at this place. Let's draw a vertical line into this place, so that we will understand that this place we will understand how to identify the recross. Let's go back to 1 hour. Now, if you look at this place now, let me magnify the chart so that we can see it effectively. Now, if you look at this place, This is the vertical line that I drew in 1 minute. Look at it from here. Now, what is so significant about this crossing is that when prices cross the 240 moving average in 1 minute, now for you to be able to have better assurance, for you to be able to trust that move, you must do what? You must go back to 1 hour to see if there is an engulfing pattern. If there is an engulfing candle that has eventually engulfed in 1 hour. Now, you need to refer to my previous video on engulfing pattern. Go there and see how I explain engulfing pattern in this video. Now, I don't want us to bother ourselves so much about this engulfing pattern, but I would just want to pinpoint where prices cross, you understand, in 1 minute. How do we know that this crossing is a real cross? It's not a fake, it's not a noise. It's for us to see an engulfing pattern in 1 hour. Look for a possible engulfing pattern in a bigger time frame, and this is exactly what we have done around this place. This candle has tell us that we got an engulfing pattern around this place. So when prices change its directions in 1 minute, we want to have further assurance in the prices that cross. Then we look for what? We look for an engulfing pattern in a shorter time frame. Now, this candle is the candle that engulfed. Now, let's go back again to 1 minute to begin to do further analysis. Now, this is the candle. This is 1 minute chart. So, and the candle that engulfed in 1 minute is this candle. This is what we have crossing. We are not looking for an engulfing pattern in 1 minute, but rather we are looking for areas of noise. These are what we are considering in 1 minute. And for us to be able to take a trade from 1 minute chart, we must look for an engulfing pattern in a bigger time frame. Now, in as much this candle here has crossed in 1 minute chart, then we have to wait for the activity of this candle in 1 hour. We must wait until this finish its action. If this does not finish, there is nothing we can do. We cannot take any action. We cannot take any trade at that particular time. We need to be very careful. We need to wait and see the overall view or the movement of 1 hour before we take action. Now, let's look at this place again. Let's look at this area again. Now, if you look at this area, when prices move to this area, look at what happened from here. The price was storing around this place. We have what we call store. The price, that is the 240 moving average, repair the price down to the what? To the downside, and we begin to have what? We begin to have a very good move down. We have a very run down into this place. Look at the way it goes from here. It run down. It run down to this very area. So when you are trading, number one, in a bigger time frame, you have to see the action of 240 moving average on a bigger time frame. Look at what prices is doing around that side. Look at whether prices is turning, whether prices is going to cross or is going to be balanced. If you have considered this factor, then and you discover that this factor is being old, this factor has been established, you move down to what? You move down to 1 minute chart to consider crossing of the 1 minute chart. Now look at what we have from here. Look at this place. Are you seeing this now? Look at the cross. After we have established a proper engulfing pattern in what? In 1 hour. Now let's see another area that is working. That might be working with this system again. So let's see. This is 1 hour chart. Now I think we have to go to more recent activities. More recent activity. Now let's look at this place. If you look at this place, look at this very area. I have to magnify the chart for us to see it very well. Look at this area. Look at it from here. this very area is an area that the prices is being repaired by the 240 moving average. Now, if I have to draw another vertical line, I'll move down to 1 minute. You will appreciate with me that we are looking for crossing in that area, in that aspect, for us to be able to take a trade. Now let's go back to 1 minute and see what exactly are we looking for. So I'm still going down, I'm still moving in 1 minute for us to be able to see properly that the prices has a very good way of repelling the price when they move to 240 moving average. That 240 moving average is one of the most important aspects of our trading system. We are still moving down. We are still moving down, but you see the vertical line. Sorry about the good. Look at the vertical line from here. Are you seeing the vertical line from here? Here is the vertical line that I drew from 1 hour. And for us to be able to get an entry, we have to move down to what? We have to move down to 1 minute. We have to move down to where prices is crossing. This is where we have a clear clear move down of of the prices in 1 hour, of the cross that we have. Now this is where we'll be looking for entry. Look at it from here, because this is where the 240 moving average cross the moving average, and this is where the 240 the prices cross the moving average of the 240 moving average. Now, after we have got this, what do we need to do? We need to cool down and enter the trade from here and see how it goes. So we look at it from here, immediately we enter, look at the way the prices continue to run. Look at the way it continue to run. It continue to run. Look at the move. Do you see the move? Continue to run. It runs until it crosses around this place. Now, in this place, if you go back to 1 minute again and then to 1 hour again, you are able to see an engulfing pattern from here. Then this should be a valid trade. If this does not give you an engulfing pattern, I believe this place is not is not a valid trade. So let's continue to move down and see how the prices is behaving with the actions of 1 minute. 1 minute. Look at the move. So are we seeing that from here? Look at this place now. Are you seeing how it's going? How it's going? It continue to move. It repaired when it got to 240. It repaired the price back to what? To the downside. Look at the way it's moving. It's still 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 moving. Are you seeing? Are you seeing that? It's still moving. Now, once you cross here, you look for a valid trade. If the trade are what? If the trade are significant in 1 hour, then we know this is a solid entry. That we got an engulfing pattern. I'm drawing this so that when we go back to 1 hour, we'll be able to see the activity. Now this is it. Still moving. So from here now, we also have a cross down. Look at the way it's going. Look at the way it's going. It's still moving. Look at the way prices are being repaired. And now the 240 moving average. And this is how the prices has been moving. Gold has been performing since last week until we got to this place. Now let's move back to 1 hour and see the action. Now these are the line that I drew. I drew those lines from here. Look at it from here. From here, this is just the candle that move up, and this area, this very area does not cross. This area does not cross. You understand? So we don't consider this as a valid entry. This is not a valid entry at all. We don't consider this as as a valid entry. So we have to forget about this. Then what we look for, because if you look at the overall direction now, it's down. So we can't take this as a valid entry. This does not engulf any candle. So we are not taking a decision. And the stochastic here is down. There is no way we can take a decision around this place. So this is the area that we are looking to take our trade and ride it to this support 1 here. We ride to support 1 and take our profit around here until we move up again and move down again. So these are basically how we use 240 moving average to grade our entry, to see where we have support, to see where the prices is going to have resistance, is going to be restricted. Look at this place, that there are resistance around this place, Now let's look for a downtrend. Let's go back to, maybe let's look at gold. Let's look at euro. Probably we are going to see euro moving a downtrend. Now this is a downtrend. Look at this from here. Euro is coming down so seriously after the prices cross the 240 moving average. So the 240 moving average is used for crossing. It is used to get area that the prices will stop. You understand? So when this area has been identified, you now combine it with a bigger time frame. If you identify this area in what? In a smaller time frame, you combine this to a bigger time frame to see what is happening in a bigger time frame. Now, if you go back to 1 hour, let's draw a line from here. Let's go back to 1 hour and see. There are multiple lines here. Let me take it off. I need to. Now this is where I drew a line. So look at it from here. We go back to 1 hour. Do you see that? See the crossing? You see an engulfing pattern from here, and the overall direction is down. Look at the way it goes. It goes down. Now if you go back to 15 minutes, let's see the action of look at it from here. When prices, the last time I was making my analysis, I said there is when euro move around this place, once it got up, that is when this place, look at this place very well, when euro engulfed this area, I said there is every possibility that euro will move up. Then I now move back to 15 minutes, I discover my 240 moving average, and I said this 240 moving average, we need to be very careful, because this 240 moving average might eventually hold the price to the downside. It might eventually invalidate the engulfing pattern that we have in 4 hours, and that's exactly what it does. Look at it from here. It has completely invalidates the move. So this move is not solid anymore. This move is not moving down. It's not the move we have in 1 hour and in 4 hours is no longer valid because of the activity of 15 minutes 240 moving average in 15 minutes. So this move failed because of that activity. So in other words, 15 minutes has changed the overall direction that we could have got in 1 hour as a result of a engulfing pattern of 1 hour. Now, if you look at the way the prices react around this place, look at once it continues to move from here, once the prices continue to move from here, it moves from here, it run down from here, it start going from here. Look at the move, start moving up from here. Once they got to this 240 moving average, they continue to behave very funny. Look at the way they are behaving. Look at the behavior. They start behaving very, very funny. Look at it, very funny. And what happened from here? They never find a way down. They never find a way up. And after they fail several times, what happened? They continue to move to the downside. So when you are trading, you must consider the activity of the moving average, especially the 240 moving average. How prices are reacting to that area. If prices were fighting that area for a couple of hours, for numbers of hours, that's to tell you that as a trader, you need to do what? You need to watch that particular area. You need to leave that particular instrument, go for another instrument that has already crossed up or that has been properly repaired by 240 moving average and start trading. So when that has finished its action, like when euro was doing this, probably when euro was doing this, You need to stay away. This, I believe this should be in the midnight. When this one was happening, maybe during Asia time, there was no momentum to do what? To move. And they got exhausted. Now, the prices got exhausted. And what happened when the London opened? Look at what happened after the London opened. They continue to come on. They come down astronomically. Now, I'm going to come up with a video on section analysis. I have a software that divides section by section, that tell us this is section, this is volatility section, this is Asia section, this is UK section, this is Europe section. We have the section. I mean, the market start from volatility section, from volatility section to Asia, from Asia to Euro. We have Euro. Then from Euro section to London. From London, we now have what we call New York Open. Those are the sections. I think it's about 5 sections that we have. So I'm going to come up with a video that will explain how the section really work and how we can basically leverage on the section to make a trade. What happened during section is this. During section, we always have what we call volatility. If you look at what is happening from here, that you check this time now, you will agree with this where the market start from here. These are Asia section. There are no much volatility. Until we got to this place, now we begin to see much volatility. And there are combination of 2 or 3 sections that make this work. If you look at it from here, we have the London Open, we have the Asia Open, and we have the Volatility Open. These 3 sections work together when the London Open. You understand? So when we now have combination of those sections coming on, and if you look at this place, I'm sorry, if you look at this place now that we continue to have direction of change, we will have a market change, prices changing up. It could be activities of New York section that is that combined with the London section that make the trend to do what? To change. So I'm going to come up. I have a very good software that explains the section analysis. You understand? But I don't want to be caught in the copyright system. So that's why I have to be very careful and seek permission from the owners of this software before I can download it and use it for you people. But I will see how I can go about it. But for the meantime, study the activities of the 240 moving average and see how this actually work. This will go a long way to assist us in trading. When prices are storing around this place, this area, to me, I consider any area that prices are having issue as an areas of noise. You understand? Why do I consider those areas as noise? Because at that point they are negotiating, they are discussing the way forward, they are fighting and talking. There are a lot of negotiation that is going on. Are we going to go up? Allow us to go up, allow us to go down. These are what is happening. And once they finally settle at a particular conclusion, that is when you do what? That is when you see the direction going down or going up. So while they are negotiating, as a trader, you don't have anything to do with that area. So this very area is what you will look at. Continue to study these 240 moving average. I'm just using 240 moving average of simple. You understand? I'm not using exponential. I'm not using weighted. I'm using simple moving average is what I'll be using. So I've made it so simple for you to be able to use this system. So by the time you study this properly, you will appreciate how this index forex trading system actually work. It's a system that I've developed over time and I've seen it working. It has worked, it has proven effective. So study it, and I want you to subscribe to this channel so that when I release another video, you'll be the first person that will be notified about this video. You'll be the first person that will learn about this thing. We can defeat this crazy market together if we collectively build a community of traders together and see how these things will work. So I wish you good luck in your trading, and I say good luck to you. So bye for now.